Most traders were looking for buys here. I was looking for shorts, and the market left all the clues behind before the move even started. Let me show you exactly what I saw on EURUSD and why I took this trade. What's up everyone? Welcome back to Zova Trader. Today I'm going to break down this EURUSD setup step by step and show you exactly what I was seeing in real time. We're currently looking at EURUSD on the 5-minute chart. Price first ran the previous day's buy-side liquidity, and then during the London kill zone, it swept another pool of buy-side liquidity above the Asian session highs. After taking the Asian highs and trading into the 2.5 standard deviation level, price started showing signs of weakness. We can see multiple rejections from this area that I'm highlighting on the chart. At that point, I got my first confirmation, a 5-minute CISD. Following that CISD, price inverted the fair value gap from the previous bullish leg and left behind a 5-minute IFVG. The next thing that caught my attention was the bullish order block sitting below that leg. Price traded through it and closed beneath it, showing no respect for the bullish order flow. For me, that was an important clue that the market order flow had shifted bearish, at least in the short term. With that information, I wasn't interested in buying anymore. Instead, I started looking for a retracement into premium pricing where I could look for a short entry. As you can see on the chart, I already had my position planned out. Ideally, I wanted price to retrace deeper into equilibrium or even into the IFVG. However, the reaction from the bearish breaker block was already strong enough for me, so I decided to enter at the upper edge of the 5-minute bearish breaker block. My stop loss was placed above the 62% OTE level, safely above the breaker block, the IFVG, and the surrounding structure. With the setup complete and the risk clearly defined, all that was left to do was sit back and let the market decide. Let's see how the trade played out. At this point, price continued moving lower and created a new low. Now, whenever I see something like this, the first thing I want to check is where we are within the overall bullish dealing range. And as you can see, price has now traded into the discount portion of that bullish leg. Not only that, but this trade has already delivered a 3R return, which is a very solid reward. So, when you combine those factors together, we're trading in discount. A low inside discount has been taken, and the trade has already delivered a strong 3R. This becomes a very reasonable area to start taking profits. You can close the entire position here, or simply scale out and secure part of your profits. As you can see, price immediately starts reacting from this area and begins retracing higher. One reason for that reaction is the liquidity that was taken right here. This could potentially be viewed as a turtle soup setup. And since price had already reached discount pricing, a retracement from this area was not surprising at all. As the pullback develops, price trades into a 5-minute bearish fair value gap. Now from this point, price could absolutely continue lower again. That's always a possibility. But if you haven't taken profits yet, this is not the place where I would be looking to add more risk. We've already achieved a strong reward, we've already taken a low, and we're already trading from discount. For me, that's enough evidence to start securing profits. Personally, this is where I closed my position. And before that, after taking the low inside discount, I had already moved my stop loss to break even. At that point, the trade was completely risk-free, and all that was left to do was protect the profits the market had already given me.